Hello students, welcome back to our YouTube channel UTC Fx. Today we are going to run a new interesting lessons with the series of lessons of Forex beginners. And without delaying, let's start our course of today after the intro. Welcome back again to our YouTube channel UTC Fx, and if you are new, please subscribe to our YouTube channel and hit the notification bell so that you will be notified when we upload a new video. Hit the like button to support our YouTube channel to YouTube algorithm, and share these free contents and these materials to your friends and the family so that they may gain these free skills of Forex trading. Before we go to today's course. Please let's do a quick recap of what we learned in the previous lessons. And in the last lessons we have learned about the market analysis, where I have seen that the main objective of market analysis is to predict the possible future movement of the market, depending either on the technical analysis or fundamental or sentimental analysis. And those are the three ways or the three techniques we've seen that are used by most of the traders to analyze the market. And we've seen that none of them it is better than another. What is needed and what is important is to master at least one, two, or all of them in order to be sure how to analyze the possible future market directions. I hope you was able to recap these informations, and if you forgot anything about this, we can go to the link on the top right corner of your screen so that you may remind yourself more about this market analysis. Or you can go to our website www.ultimatetraders.rw to learn more about the technical, the market analysis. Today we are going to run what we call price chart. But before we go further, let's see what is a chart. A chart is a simple visualization and the visual representation of a currency pair's price over a certain period of time. That is what we call chart. On the chart we do have two axes, the vertical axis, and which is normally called y-axis, and the horizontal axis, which represent the time scale. The price chart helps us to define and analyze the currency pairs, the movement and the patterns and the tendency of the market. That is the only law of price chart. There are three ways, most common used ways to visualize the price movement and the patterns on the platform. And these three ways we will use typically the line chart, the bar chart, and the candlestick bar chart. The line chart, it is a simple chart that draws a line from one closing price to the next closing price. Let's say we wanted to see the visual representation of the price movement on the daily time frame basis. What we do, we take the closing of each day and we assemble this closing price of different days. And if we combine this closing, we will get a line. You know that a line, it is a set of many dots. So that is how we get the line chart. The line chart has a pro of line chart. It helps us to get the picture of the picture view of the market movement over a set period of times. And the limitation of the cons of the line chart is that it only allow you to see the closing of X market at end of any period. You have no clue, you don't know what's happening during the day or during the period you are visualizing the price movement. That is the con of line chart. Let's go to the platform, and in order to show you how it looks, the line chart looks like. This is the Euro Swiss on a daily time frame, and you see what it will do. Currently the market, it is here. At the end of the day it will close, and these are the closing of different days over the time, which I highlighted on this. So we can see the clear picture that this market, it is heading down. That is only what we can see, but we cannot know what's happened on 23rd of June, which was here. We cannot know what's happened on the 24th of July, which is there. And even now, what we can see, it is only that the market is heading down, but we don't know what is really happening in this market, which is the cons of, or the limitation of, the line chart. The second way to present, to visualize the price movement, it is bar chart. Bar charts help a trader to see the price range of each period. That is the advantage for the bar chart. It shows that the opening and the closing price, as well as the highs and the lows of the price in a particular period, which you may choose for yourself. Let's say if you want to visualize how the market has moved during a day, this part, the bar chart will shows you the open, the closing, the high, and the lows of the trading session. The horizontal hash, the left of the candle, it shows the opening price of the market in a particular period, and the horizontal hash on the right side of the closing, it is for the closing price of the bar chart. And it has also a vertical height of the bar. It reflects the range between the high and the low price of the bar in a particular period. Let's see, and the bar charts are also called the OHRC chart because they indicate the open, high, and low, and close of any price of the price of any asset in a particular period. The big difference between the bar chart and the line chart is that the bar chart can show the volatility of a market. At least with the bar chart, you can see the volatility of the market in a particular time, which you may choose for yourself. Let's see how interpret the line chart. As we said, the line chart is characterized by 4 elements. The left hash, which represents the opening of the market in a particular time, and the bar, which indicate the range of the market in a particular period, and the left hash, which indicate the closing of the market in a particular time. The high of this bar, it is the price has reached in a particular time, and the low of this line indicates the lowest price the market has reached in a particular time. The third way, another way we use it to represent the visual representation of a price movement, it is a candlestick chart. The candlestick chart is a variation of a bar chart, and candlestick charts show the same information as the bar charts. It means the open, close, high, and low, but in a prettier and graphical format. That is the only difference. And the candlestick helps to visualize the bullish and the bearish sentiment by displaying the body of the candlestick with different colors. Let's see how to interpret the candlestick pattern. Candlestick pattern also has 4 characteristics. You see, and as we said, the advantage and the way for candlestick pattern is that it will have a body, which make it prettier compared to bar chart. and we can see the sentiment of buyers and sellers because of the size and the color of this body. So the four characteristic, it is the open price, which is the low of this body. For the bullish candle, for sure we receive a difference for other candles in the future. And the closing price, which is the high of this body, the low price, which is the low of this shadow, and the highest price during a particular period, which is the high of this shadow. The candlestick pattern has the advantage. They are easy to interpret. They are easy to use. The candlestick patterns, candlestick bars, and the candlestick patterns have cool names such as shooting star, engulfing star, hammer, doji, which helps you to remember them easily and to remember these patterns and to interpret them. And candlestick patterns are good to identify the turning points of the markets. So with them you can identify the possible reversal area of the market easily. Those are the advantage of the candlestick pattern. The cons of a candlestick pattern is that you cannot know really what happens inside the candlestick pattern. You only get the big picture, but many things can happen during a certain period. Let's show you, before I go to the conclusion, let's show you how bar chart and candlestick bar are. So the bar charts are like this. As we said, you see it has a left hash which shows the open. Sometimes it can be below or it can be up, as you may see here. We'll see them in the next courses or next lessons. And it has a light hash which could be high or down. We'll see why in the future, which indicate the closing price. And it has this bar which shows the range between high and the low of the price movement during a particular period. For a candlestick bar, we have candlesticks, and you see they look nice because of these colors. And the most advantage of this candlestick pattern, you see, it is that they can indicate, they can help us to identify the possible turning point of the market. You see here it was going up. With this candle, we could know easily that this market is going to head lower. These are three popular visual representation of a price on the platform. And let's go to the conclusion. There are different ways of representing the price on the market, but none of them it is better compared to each others. Every technique or every way of representing the price visually on the platform, it has its advantage and disadvantages. You only need to choose one which suits you, which you find better for you, and master it. And we are here to help you in your future. Listen to know which one is better for you and which one you can use. The data that are used to visualize the price movement on the charts are the same. The only difference, it is the way they are presented and the way we interpret them. And as I said, each chart representation has the cons, pro and cons. You can choose any type or use multiple type of chart for technical analysis. It depends on your personal preference. No big difference over there. So thank you very much for this lessons of today. I hope you enjoyed it. And if you enjoyed it or if it was very interesting to you, please comment below and tell us which type of chart visual representation you will be using and why. And please, if you are new to our YouTube channel, UTC Fx, don't forget to subscribe and hit the notification bell so that you will be notified when we release a new video. Don't forget to hit the like button in order to support our YouTube channel with YouTube algorithm, and don't forget to share this free content to your friends and family so that they may learn this career of Forex trading. Thank you very much. Let's meet in the next lessons, and may God be with you. Thank you.